Good afternoon, Shaw. My name is Tyrone Bean,
I'm Robert Willits.
and we'll be discussing Chapter 14 on accounting and financial statements. Next slide, please.
A quick overview of Chapter 14. What is accounting? We have a short video for you as well. Why accounting is important, and also including the different jobs.
What are financial and income statements? Or our assets and liabilities and owner's equity? We'll be discussing the 7 types of ratios and transactions.
So what is accounting? Accounting is a recording and measurement of interpretation of financial information. Accounting oversees and manages large scale of businesses' financial records. There are 2 types of accounting, such as financial and managerial accounting. Finances decide how an individual should invest into a business.
Next slide, please. So here we're going to be discussing, show you a video like the overview of our purpose of what is accounting, and our focus is understand that we hope that accounting we hope that we discuss that what accounting is and assets, liabilities, and owner's equity is our main focus of this project.
Hi, in this first lesson, we'll try to answer 3 main questions. What is accounting? Why do we need it? And what types of accounting are there? I'm sure you'll agree with me that these are 3 important questions we should ask at the beginning of the course. So let's answer the first one. What is accounting? Accounting is an information science that is used to collect and organize financial data for organizations and individuals. Okay, perfect. Let's break down this definition. First of all, we said that accounting is an information science. It is concerned with analyzing, collecting, and organizing information. But what type of information? Accounting organizes financial information. It is about money. It is quantitative in nature and measures money. Accounting isn't an abstract science. It is much more practical than theoretical. It's one of those things that you'll learn best by doing. The last part of the definition says that accounting serves organizations and individuals. How come? Well, as one can imagine, every firm needs to be able to organize the financial information related to its business. A firm has to know how much of a product it was able to sell, how much it cost to produce the product, and how much money it has in the bank. Similarly, an individual needs to be aware of their personal finances. If they don't pay attention to how much comes in and how much goes out, they may soon be in deep trouble. I think we've answered the second question too. Accounting is a science that helps us organize and represent financial information. And it helps corporations and individuals understand their finances and make decisions about the future. Accounting helps you to use the past in order to take action in the present and change the future. Pretty cool, right? However, there is one more question that we need to answer. What types of accounting are there? There are 4 main areas of accounting. First of all, we have bookkeeping. Without bookkeeping, we wouldn't be able to do anything, because bookkeepers are responsible for all of the information that is collected and taken into consideration. Bookkeeping is a fundamental activity, as it ensures that financial information has been gathered systematically. Then we have financial accounting, which focuses on the 3 main statements: income statement, balance sheet, and cash flow. It is prepared for the company's ownership, its lenders, financial analysts, and for other external stakeholders. It is highly regulated, given that the information is prepared for third-party users, and they should be able to read it without having inside information. The fact that the information is prepared according to a specific set of rules renders it comparable with the one prepared by other companies, which in turn facilitates investors and lenders. Financial statements are prepared according to a uniform set of rules called accounting principles. The aim of these reports is to allow externals, like banks and investors, to get an idea of your business. How much sales you had? Was the company profitable? How was it financed? And so on. The third type of accounting is managerial accounting. It is available only for insiders. It is not defined by accounting principles and is in most cases more detailed than financial accounting. It contains strategic information that shouldn't be seen by the firm's competitors. Managerial accounting looks into topics like pricing, competition, marginality, budgeting, and so on. The company does not want to reveal this information to outsiders because, well, otherwise outsiders will prepare a counter plan and gain strategic advantage. Of course, managerial and financial accounting are often interrelated, and it is a frequent practice to reconcile managerial and financial accounting figures. The fourth type of accounting that we need to mention is tax accounting. This is the accounting that will determine the amount of taxes that a company has to pay. Tax accounting is a very technical field that varies for every single legislation in the world. We won't cover it in this course. In this course, our main focus will be on bookkeeping and financial accounting, as they are the solid foundation that one needs in order to understand financial transactions.
When you think of accounting and finance, what comes to mind?
Are you on the slide why accounting important?
Alright, so that was just a short video kind of explaining the overview of accounting and why it's important and different types of accounting.
And I hope it I hope it pushes our focus on why accounting is such an important deal in our today's society.
So, quick overview. Why is accounting important? Accounting helps connect activities from many different organizations, such as employees, managers, customers, and shareholders, and etc. Accounting also helps you understand what is going on in your company financially. So all records, everything's on books.
Next slide, please. You want to talk about that?
Yeah, different types of jobs. Following accounting, you have controllers, financial analysts, tax occupants, bookkeepers, auditors, CPAs, which are certified public accountants, which also do your tax returns, 401ks, all things regarding that. And also business system analysis.
For a CPA, it's really hard to get your CPA license in accounting. It's one of the requirements if you wanted to be able to be a CPA certified accountant. You have to have at least 150 credits to be able to do the program or have your master's degree to be a CPA. Next slide, please.
So what are financial and income statements? Income statements show organization profitability over a certain period of time, such as a month, quarter, or year. Financial statements shows and records that cover a business activities and performance.
Next slide, please. So today we'll be talking about what is accounting equation. Accounting equation is the assets equal liabilities plus owner's equity. It'll say shape stockholders the same thing as owner's capital. Next slide, please. So we'll talk about what are assets, liabilities, and owner's equity. An asset is anything of value or resource of value that can be converted into cash, individuals, companies, and a government-owned assets. The liabilities are the debits that a firm owns to others, and the owner's equity is owner's equity equals assets minus liabilities and reflects historical values. Next slide, please. Examples of assets, liabilities, and owner's equity. So we did assets, which is cash, accounts receivable, land, office supplies, business, buildings, furniture. The liabilities is accounts payable, unearned revenue, notes payable, and then owner's equities. This is capital, and then you have owner's withdrawal whenever a accountant wants to do a withdrawal from the owner's capital. Do have a separate account for owner's withdrawal. Next spot, please. So there are 7 types of ratios. There's profitability ratios, liquidity ratios, debit utilization ratios, and current ratios. Next slide, please. So in transactions, so what happens during transactions, we have recorded transactions, which is our journalized entries. It records transactions on a journalized entry that later posts on your bookkeeping, so you can look back on and compare your income and expenses. Post transactions are a ledger that will file your recorded transactions into groups such as gas, bills, and office supplies. Next slide, please. So, an overview, we talked about what is accounting, the different types of accounting, what jobs you have doing in accounting. I'm trying to be an accounting major, so I want to be a CPA best way in the future. I don't know about you, Rob.
Business administration, so managing a business and running and operating a business. So Tyron could be my accountant one day.
You trying to own a business?
Yeah,
What kind of business?
whatever makes the money.
I ain't not gonna be in charge of your money. So just to wash our butts so we don't get a bad grade, we put our works cited on here. Hope we use our book for our class and also a book for another class, which is our accounting class. Steph is our dude in the man right now, the video taping. He's been helping us out with this project, so thank you, Steph.
No problem.
You have any words?
I hope that the information we gave you today was very helpful, and I hope you have a good day. Thanks for being an awesome teacher.
Thank you for all the presentations of how to start your own business and everything for the past
Very helpful.
month. It was very helpful. I learned a lot, especially during the Port City Java trip. But thank you, Sean.
That's awesome.
And Merry Christmas.
Yep. Thank you. Merry Christmas.